It's real good.
How much can they take?
Don't let him cry about that.
Don't let me hear you starting
We're
already.
back, Thomas. Don't let him cry. Don't let me cry about what? First thing, Dan, welcome to the show, by the way.
Good morning. Good morning.
Welcome. Dan goes, I got an email. You guys are doing a nighttime show tonight, too?
I can't believe Dan actually gets emails.
I can't believe Dan actually read the email.
Yeah. Like I have this picture.
Don't lie. Did your wife open them up? Because Mike North opens up most of his wife opens up most of his emails. Is that true?
Sometimes she does.
I plead the fifth.
We're kind of a team there.
I kind of had this vision of Dan, like, getting his first...
Don't do that. I mean, first you had this vision of me in yoga pants, now you got this vision of Dan. Don't go down. It's a slippery slope.
I have no vision of you in yoga pants. I just found it interesting that you said you went to yoga. I knew there's no way you would ever go to yoga. There was he went to yoga. There was other motives.
Salt, as they say. Salt.
There was
I went numerous times.
There was other reasons. Okay, it wasn't nothing to do with yoga.
Okay,
but I kind of
spiritual enlightenment.
Yeah, spiritual.
I kind of
kept me grounded.
I have this vision of Dan like getting his first computer like 6 months ago, and like
3
months ago, right?
See, I have this vision of him still having like the compact computer. Like he still has it from like 20 years ago.
It's close. I just got an iPhone a couple weeks ago.
See?
Only because I was going to get just a regular phone. And the guy says, why are you going to pay $130?
Because the Canon string was working so well.
the Canon string. The Canon string.
I had a compact laptop, and I tell you, it was a great laptop. I dropped that thing like 25 times, never broke, never died on me.
Really? See, that's the good.
Yeah, I judge laptops by kind of how I kind of beat this one. As much as I hate Dell, this particular laptop has held up. I'm in shock it's still working.
Really?
Because I will not get rid of a laptop unless I completely run out of memory, which I'm about to do here.
So it's pretty sturdy. You can drop. I mean,
no, you can't really drop it, but for some reason, it just depends how they fall.
Okay.
Yeah, I tried everything. I bought the lightest laptop ever made, which was about, I want to say, but this before the Apple.
Before
Air.
they got really light.
This was
about 6.5 pounds.
No. It was like 1 point. It was like a Fujitsu at 1.2 pounds or something, but it was too. I still have it. It's just too flimsy to use.
Yeah.
And then I bought, and that was ridiculously expensive. And then I bought the tough, the tough case one.
Mm-hmm.
I want to say
How was that?
I want to say it was Sony or Panasonic that made it. I can't remember, but it was the one where you could drop it.
Really?
So tough case. It was called tough case.
Right.
Yeah.
It weighed a lot.
It was had like a web around it or something, right? It looked like a. Yeah.
So you could drop it.
Right.
Yeah.
So like the whole thing with that one is though you're sitting there, you're like, should I just drop this to see? But then you're like, what am I trying to prove here?
Yeah.
Like the seatbelt works type thing.
Yeah.
So it turned out that one was just too heavy.
It's like those. Can I just go off just for a second?
Yeah, sure.
It's like, you see those vacuums. I just want a vacuum that picks up dust. And you see these vacuums. I remember we got an Oric. It's like it can pick up a bowling ball. It can pick up a small child. Like but it can't pick up stinking dust. And anyways, I'm thinking of these computers.
Dyson.
That Dyson.
It's unbelievable.
Oh, you like it?
Oh, it's unbelievable.
Really?
Yeah,
It does.
the Dyson too.
Unbelievable.
Yeah.
I'm
in.
I was just like you. I agree.
I was too, and then I got that Dyson one.
It works like a vacuum should.
Unbelievable.
I don't care about a bowling ball or a small child.
And the good
Pick
thing
up
about it is
dust.
she could still wear heels while she does it because the ball just rolls.
Whoa, wait a
anywhere
second.
It goes. It's beautiful.
Wait a
I
second.
have no idea how it picks up any dust.
Wow. Wow.
So our office, when Dyson moved in above us with their new headquarters.
Oh, I didn't know that.
Yeah, they're at 600 West Chicago.
Wow.
And they built a spectacular office above. Now they're pretty creative with a lot of their stuff is marketing. Their bladeless fans and stuff like that. But what they would do to get people in the building is they'd sell you at a huge discount. Just people in the building. So if your office was near Dyson, our office is right below Dyson.
Yeah.
Let's get say how many vacuum cleaners do you want?
Wow.
Type thing. It was just because, hey, we're going to be a good neighbor. We're going to sell you the vacuum cleaners at whatever, a little bit
Cost,
under, whatever, a little over cost, whatever it was.
That's neat.
So they would sell so it was like a $400 vacuum cleaner. They'd sell it to you for $200. So only because our offices were next to them.
Yeah.
So everybody had these Dyson vacuum
Everybody
cleaners.
had Dyson vacuum.
I swear to God, everybody in that building has a Dyson vacuum cleaner. But very interesting style because it's hard to imagine a vacuum cleaner company. Dyson's, are they public? I've never traded their stock.
Sure.
Have you traded their stock?
No.
Okay. So let's talk markets a little bit. We've got I think today is one of the more interesting trading days. I'll tell you why. Because my screen lit them up this morning. It was like Christmas trees blinking, and there was quotes moving and everything going on. Nice continuation rally. Just I know you're not watching the screen, Dan. S&P's up $7. Gold's up $5. The Nasdaq's up $11, and bonds are down about 28 ticks, and notes are down about 20
ticks. Say it loud, say it proud, Thomas. Bonds are down what?
28.
Perfect.
Hold, keep falling here. Anyway, Dan, the topic for today, because we're in the middle of this earnings cycle, and so far, if we can gather anything from the earnings cycle, at least to this point, Goldman being the fourth financial company and the only one that traded outside of its range so far was Citigroup, and that's only by a little bit, which was to the upside, and that came back in today into the middle line. So far, we have seen earnings that have been very measured. Okay, nothing crazy. Now we're about to get to the big stocks the next couple of days.
The big dogs are coming.
Yeah, like Chipotle, which had. Let's talk about Chipotle for a second.
Sure.
Put it up on the screen. Is it earnings this afternoon or is it tomorrow?
Earnings are not tomorrow.
Oh, they're not tomorrow. Okay, I'm sorry, but
the 18th or so.
Okay,
after the market closes.
Throw up Chipotle. So after the last earnings thing, like when you see that, you see the last earnings move, which is down about $90.
Yeah.
Okay. When you see that, when you know that's your last earnings cycle, when you look at this earnings cycle and you know that everybody has that in the back of their mind, like what are some of the plays? Because we're getting bombarded with emails about what are some interesting plays in Chipotle here, Dan.
Got 110 vol in the front month.
Yeah.
Compared to 50 in the back.
Okay, so they don't, yeah.
And a $90 move last expiration.
Sold. I mean, you're thinking, again, I haven't looked much at Chipotle, but if they're still, is the straddle, so they're pricing in what kind of
about a $25 move.
$25 move. I mean, the first, without knowing, the first response would be, let's bet against, let's bet against expectation, bet more of a narrower
okay. So
range.
Let's say, so we agree with you. Tony, you and I all say the same thing here. We're all going to bet narrow range this time, which I think everybody else is as well. So like I don't think that may be the public move. I think it's the right move. But again, so let's say the moves, Tony, is expected to be. Can you go to an option page, please?
Sure.
And let's say the move is expected to be a $25 move. All right.
Okay.
I mean, it is. We don't have to say it. We'll show this how to do this too. So if the earnings are on the 18th, and today is what? It's the
today. It's before earnings. Today's the 16th.
Right. So it's Thursday.
I mean, it's before expiration.
So it's Thursday afternoon. And if we take a look right here in the stocks trading, what's the closest strike? 295. Right here?
Correct.
So the
it's trading for around $26 the straddle.
Yeah. So you're taking about 85% of that. You're probably talking about a $23.50 move is the expected move. Okay, so 23, let's call it $23 expected move. So now, Tony, close up that order book for a sec. Now let's look at some of the things, because first thing that we would do is maybe we'd go down. Can you open a few more strikes, please?
Sure.
So Dan, you said, okay, we stay inside the range. So if we went and looked at a true one standard deviation move, we'd have to go and basically we'd have to sell either the 255 or the 260 puts, okay? Because that's a one standard deviation away. And then on the call side, we'd have to go up to the 325 calls. There's a lot of premium in that, by the way. A one standard deviation move using the 255 puts and the 325 calls. You're collecting about 320 and let's call it 220. You're collecting almost $5.50. It's a decent sized premium.
It sure is.
And that's a one standard deviation move. If we go to a two standard deviation move, actually, Tony, let's put that in the order book for a second. So now, Dan, if you were looking potentially,
and you said last move was $80, Tom, or 90?
Yeah, about 80 or 90.
Okay.
But it was way outside but the stock was a lot higher.
Correct.
So first thing we're going to do is we're going to set up a one standard deviation move so everybody can see this. This is the 325 calls and the 255 puts.
Yeah.
Okay. Each one has about a 15 or 16% chance of getting there. Add them together, 32, subtract from 100, 68%. That's a one standard deviation move.
Right.
Right? Okay. So now let's go down to a two standard deviation move and see how much capital we can collect if we were going to do this. So Tony, if we take it down to a two standard deviation move, we're going to kind of have to, or let's do like 1.5. because that makes more sense. We'll take it down to a 90% on like a 5% chance on both sides.
Sure.
So you want to put blast all up here so we can do
No.
Okay.
No, not. We understand this is 550.
Okay.
Now let's go down to where there's a 5% chance of hitting the
So you want to look at the 230 puts?
230 puts. There's a 5% chance of hitting that. And let's go to wherever the calls are.
350 calls?
350 calls. Now the calls are going to trade a little richer here because of the huge down move last time.
Yeah.
So the market's already built in that skew. You see that? Pretty interesting.
Yeah.
Because the market's already said, okay, the stock's on the low end of the range.
Yeah.
So we're going to skew this thing where the risk is to the upside.
Right.
And that's another takeaway. So the choices here, there is a 90% chance. You take 5% on one side, 5% on another side,
Yeah.
and there's a 90% chance. Let's call this a this is not quite a 2 standard deviation move, but a 90% chance.
Yeah.
5% on each side to collect $1.50. Now, we're not really talking about return on capital here because there's only 1 day to go.
It'd be a 1
Right.
day.
It's a 1 day play. So, Dan, if you're looking at short strangles, I know you're not a huge short strangle trader, especially this, but this is the kind of stuff that we like to look at from a statistical chance. Does a Dan Sheridan go with the 68% chance of success and the $5.50? And that's not a break even. That's just the $5.50. Your break even is actually a little better.
Yeah.
Or do you collect the 152 and the 90% chance of success? Because this is what most investors, this is what they struggle with. They don't struggle with the risk as much as they struggle with the logic of which one do I go for.
Right.
Well, and that's a tough one because this isn't like to me, it's a different ball field. It's not like we're analyzing our typical income trades. Like if I'm trading SPY or something.
There's no analysis here. This is like,
No, I mean, you're right. This is there's an event coming. It's a little different than the normal stuff we do on a daily basis. But I would be my thoughts would be, if I'm going to do small size anyways, I'd rather try to make a little more dollar-wise if I can be rewarded if I go like that one. What did you say? The 1 standard deviation
the
one.
first one was a 1 standard deviation. The second one was
because again, there's that big expectation, right? And if I'm betting that, hey, sure, it's safer to go 2 standard deviations, but I probably would go 1 maybe a little closer, just because it's more dough, and I would get more rewarded if it stayed in that range. More contrarian. I mean, I'm just going against. If everybody says, they're scared of last move, what are the two? What is the strangles, Tony? It's $2 for the
$1.52. Yeah,
$1.50 for the 2 standard deviation and $5.50.
It's not 2 standard deviation. It's just 1.5.
And the other one is plain 1.
Correct.
Yes.
The only thing I'd like to see on the plain 1, the earnings besides the last one, like the last 3 or 4. Were we getting, so the last move was like 10%, some huge one.
Oh, the last move was almost 30%.
Okay, so the previous
25,
couple before that, what
they were inside of a normal range.
So maybe within a standard,
yes.
Okay, if that's the case, maybe I would look for some kind of reversion back to some normalcy and sell the 1 standard.
I agree with you.
Sell the 1 standard deviation. I mean, but I wouldn't be, but again, that being said.
I think you got to fade this move regardless. After what happened from the last one, I think you got to fade it.
I fade it, and the only thing keeping sanity here.
I might even.
You might go closer.
Let me just say something. There was a time when I used to think that about Google because they'd move 5 or 7% every. It
I
wasn't.
know.
They didn't give it up.
Listen, but look at the last 2 earnings in Google. Nothing. Right? Agree? The last 2 earnings, and so that's why you're almost tempted to sell the stinking straddle.
Hey,
but that would be too aggressive.
We've been hot in Google. We've been hot in CMG. We saved ourselves on an earnings play. We sold it around 340. It fell off. It's trading around 295 now. I'm going to roll the dice with CMG again.
You're going to face your boy David Einhorn.
I'm going to face David Einhorn. Yeah.
Hey, so there's an interesting football analogy here, which I think we can make, which may make sense to people. Imagine you were betting on a field goal kicker, and the weather conditions were nasty. That was the last time in Chipotle. This time, you got perfect weather conditions, and you got this kicker. And he's a decent kicker, not an unbelievable kicker. Because you don't care that much. You've never seen it. You just watch the guy for a few minutes.
Yeah.
Now he goes out, and you can bet as much as you want that he can make a 30-yard field goal, okay, which is pretty easy for professional kickers. And that's like a full 2 standard deviation move. It's like a 30-yard field goal. You're basically, if you went a full 2 standard deviation, you make about 70 or 80 cents, I'm guessing.
Yeah.
And that's what you get paid. Now, if you want to make 10 times that, Okay, you're going to take this same guy in perfect weather conditions. And I say they're perfect because last time they were rainy. So this time you have perfect weather conditions. You take the same guy, you move him out to the 50-yard line or 50, 52.
Yeah.
And then remember, there's nobody else out there. So it's a single binary event. One kick. Now, from the 30-yard line, the guy's going to make 20 out of 20. He's going to make 49 out of 50 with nobody blocking, whatever it is.
Right.
These guys are pros. From the 52-yard line, okay, it goes, he probably makes, just what the odds are here, 7 or he probably makes 8 out of 10.
Right.
Right? He makes 8 out of 10. But your payout is 7 or 10 times as much. But instead of making, 29 out of 30 or 29 out of 50, 29 out of 30 or 49 out of 50, now here you're going to make, if you did it 50 times, he's only going to make 40 or 41 of those 50.
Right.
Right.
And then that's your payout. And that's the whole difference. Which one would you bet on?
Did he get to ice him? Did you get to call
You don't
his
get to
timeout?
ice him.
Was it you who told me about this? Did you hear this? I either read it or you told me. I couldn't remember. They said that
Statistically speaking, if you ice the kicker, it's actually worse.
it's worse, right?
Really?
Yeah. Isn't it amazing?
I didn't know that.
But that's why some football coaches are so stupid, because they still think they'll ice him because in their head it's better,
Right.
and it actually is statistically worse.
Right.
And as soon as you know it's statistically worse,
You stop doing it and save your time out.
or you fire that coach because they're too stupid to understand statistics.
Or hopefully he goes plays for the other team. they,
Well,
they buy him out.
It's, again, this is what drives me crazy about sports, and we'll talk about it later. But I'm just giving the example. So you got the 30-yard kick, which is a layup, or you've got the 52-yard kick, which is still a very high probability of success, but no layup. And again, the conditions are perfect this time because last time the conditions were so bad. And that's the cool thing about trading. And there's no right or wrong answer.
Right, right. But you're definitely tempted to come in, and the question is, how close are you willing to go to fade the hysteria because of the last one? And I think obviously looking maybe at the last 2 or 3 earnings, would you come a little under a standard? I mean, would you come like right? Is that as close as you would come to the?
I'm going to probably go outside of a 1 standard deviation move. What Tony and I like to, we showed you 68% and we showed you 90%. My guess is we're going to come in between those two. So we're going to I like to be wrapped around that 80% number.
Okay.
And for both sides. So I'm looking at about a 10% move on each side. So you go back to that.
So stock right here at 300. Do you skew it anyway?
Oh, you definitely skew. So go back to the option page for a second. So let me show you where I'd be, Dan, because I'm comfortable in the 80% range. So on the put side, I'm going to go to the 10% put, wherever it is, right?
245.
Yeah, 245. That's exactly the 10% put. And on the call side, keep going. And on the call side, let's take it up. On the call side, where's 10%?
10% is 335.
That's the one, 335. And right click there. So this is where I'm leaning.
Oops, sorry.
So pretty balanced, Tom?
Pretty balanced. I got this. I'm not a huge David Ihorn fan at all. I hate people that talk their positions, but I always have in the back of my head that first earnings on Green Mountain Coffee Roaster after they kind of kiboshed the whole thing. And I think that's already happened in Chipotle. So I like this trade for 355 or some variation of this. This has the 80% chance of success.
Okay.
Here's the cool thing about trade. Dan, I'm sorry for going off on a different direction here.
No,
but this is the trading piece that I wanted to talk about today. I think what most people don't understand about trading is that we are trying to figure out this trade based on nothing other than probability of success.
Period.
And we're trying to figure out a number based on liquid markets. We just looked at a 68% chance of success, a 80% chance of success, what Tony just had up, and a 90% chance of success. And we're showing the difference in credit receives, and you can figure out the break-evens by just adding those to short strike. And it's very simple. That's trading.
Right, and then
that's the future of trading.
Right, and then there's the nice thing is there's some flexibility within that 68 to 90. Where are you comfortable jumping in there?
Exactly.
Right, and that's where the flexibility, but it has to be based on that probability thing to start the game
well,
with.
355 is actually pretty rich. So what I might do is actually take it to the 84% number, which would be kind of a little more. We're somewhere between 80 and 84.
And 355 is mid-price too. By Thursday, who knows with volatility?
That'll be $3.
Right.
But you're saying they want you to do it today, and the reason I want to do it today is what if the stock's trading for
$20 higher, or $30 higher,
right?
$30 lower.
But with the stock beaten up, you wouldn't come a little closer on the put side, or you'd like just because of what you said?
Yeah, I'm probably I'm probably, I don't know yet. We'll see how the stock reacts. I also take into account the rest of the market. So the rest of the market,
Good point. Yeah,
so
that's
if we have a strong day going into that, then maybe you might play it a little bit more bullishly. If you had a weak day going into that, you might
You'll
play
let
it a
the
little bit
market-
more neutral.
Goldman Sachs is totally unchanged today.
I know, I saw
and
it.
and that's on a very strong market. If the market was weak today, the stock would be down $3. That's the difference. Dan, we gotta let you go.
Okay.
It's great today.
Thanks,
Thank you.
Tom. Appreciate
Thanks a lot.
it. Okay.
Good stuff.
Thanks.
We'll be back in 90 seconds with the opening bell. You listen to Get Tasted on the Tasty Trade Network.